How's it going, everyone? It's Sam. We're talking about 5 different stocks that I am looking at that I think are good values or maybe even undervalued for their long-term growth. Now, some of these are pretty expensive right now, but I think they can grow and they can keep on running up from where they are now. We've seen a lot of stocks run up 30, 40, 50, 60% in the last week. I think there are some good opportunities still. And a lot of people have asked me after I put out videos on these companies that have run up like 86%, like NBAC, the next day after we talked about it, it went up that much. We got 86% gains. We also had over 100% in CIIC. We also had 20% in RMG. A lot of people ask, is it too highly valued now to buy in? So these are the companies that I think are still at a decent value. And I am throwing in a couple bonus dividend stocks just at the beginning. So if you guys like this, please leave a thumbs up. I really appreciate it. It means a lot. Also, if you want to get all my buys and sells, so I bought a lot of companies this week and we did really well. You can check out the link down below to Patreon where you can join our investing chat. We have over 300 members now, and it's an ever-growing community. Even if I can't answer something for you, I'm sure someone in there can. There are a lot of smart people in there. And again, if you want to get all my buys and sells, those are in there too. And if you want 4 free stocks from WeBull, definitely check out the link down below. They upped it from 3 to 4 recently, and I think it's just running for a few more days. So definitely check out that link if you want that free money. I think it is done on November 28, I want to say. So definitely check out that link to get those free stocks. Just deposit $100. And if you don't mind hitting subscribe, please hit subscribe. I appreciate that. So let's take a look. The first 3 stocks are just honorable mentions. We'll blow through them real quick. JP Morgan Chase, nice dividend paying stock. I own a good portion of them. They are reserving a lot of money right now because the Fed is kind of restricting them and what they can do with their dividends and share buybacks and stuff like that. But they earn a lot of money, right? Their last quarter, I believe it was about $9 to $10 billion in net income, and they're at about $370 billion market cap. So even with the pandemic going, they're still at a PE ratio of about 10. Interest rates are really low. So as they raise interest rates, the Fed will do that several years from now, probably. As they do that, these companies, these banks will become more and more profitable. STOR Capital is the next honorable mention. They are a company that I hold a good portion of, and they pay really high dividends. They are REIT, and they are able to charge higher rent than a lot of other companies because they are, working with a little bit lower grade tenants. So they're not working with Starbucks, like these massive, massive Home Depots of the world. They are working with like the next tier down. So they are able to see for each location the profit and loss from those companies, as opposed to other REITs that, they're working with Starbucks and they can't actually get those because Starbucks won't give them out. So this company has nice returns. They pay a nice 4.3% dividend yield, and this is through the pandemic. They've been able to hold up. The next company is Walt Disney. This is getting into a growth company. They are a streaming stock now. So they used to be just a brick and mortar, but they're starting to be valued more like a streaming stock. You can see that they've actually jumped up a lot recently. I still feel like it's a good value because when we hear about vaccines or anything like that, the stock jumps up. People are excited about their parks reopening. I think there is a potential catalyst there as we move away from the pandemic. And even if we don't move away from the pandemic, we're still seeing more people join their streaming platforms. So that's really good for the company too. If you guys want to see more of these 3 companies, I talk about them a lot in my weekly dividend series. The next stock, which is one that I bought a good amount of over the last few weeks, that is a tech stock, a growth stock, is Teladoc Health. So they are being bought up by ARK Invest. ARK Invest is buying a lot of this company. Like this is one of their top 2 or 3 buys, usually every week. And they are a telehealth company. They are growing a lot, especially with the pandemic, obviously. So you can schedule like your doctor's visits through Teladoc, and they are able to provide a much more efficient, a lot faster, a lot cheaper alternative to going to the doctor's office. So you don't have to wait in line, drive 20 minutes to the doctor, wait for 30 minutes there, see the doctor for 5 minutes, and then have to wait longer. The average hospital visit or the average doctor visit is over 2 hours. I found that out. So this company is able to really take advantage of that, and they're being pushed so far forward because of the pandemic. Now, some people are worried, well, after the pandemic, will it actually lose value? Will it actually have less business? And I don't think so. I think it's just pushing them even faster. But once we get out of the pandemic, I think a lot of people will still want to transition to this type of medicine because it is a lot faster. It is a lot cheaper. So Teladoc Health is a company that I've been buying. They've been actually down a significant amount from their highs because right here you can see they still at 190 and they were at 250 before, so they're still down 24%. The next company is LGVW, and they've been moving up a good amount. I talked about them early on, I think right around $12.50, and we bought, and then we bought more at about $13.50 and more at $16.50. ARK Invest is buying this company. They just started buying it. They're a mobile ultrasound company that you can literally plug in the ultrasound right into your iPhone. There is a small market for this company, about $8 billion a year, but this isn't a huge company right now. They are backed by Bill Gates. They are being invested in by ARK Invest. And they were just covered in an article recently. So I talked about this in the second half of one of my videos recently, but they were covered in an article saying that they were using these devices to detect pneumonia in pandemic patients. So I tried to put it up on my page, but YouTube actually took down the post because it said some words that YouTube doesn't actually like. So it took down the post, but it's an interesting company. I think if this continues, that they get some hype in the media like that article that I was just talking about, that could be huge for the company. It's still pretty small, and I think it could definitely run up more. If it gets to a stupid valuation, though, if it starts to get mid-20s or something, I'll probably sell out because I'll have 100% gain at that point. The next company is APEC Technology Acquisition. They are merging with Avepoint. So I talked about this in a full video just the other day. They are a company that works with cloud. So they help Microsoft with their cloud, and they actually have really good revenues. I believe it's right under $150 million right now, and they're being valued at, I think, right about $2 billion. Again, I did a full video on that if you want to check it out, but they've been running up a lot. You can see we bought in actually when they're about 15% up after market, and it's gone up about 5% after that. I think that it still has a lot of room to run because not too many people know about it. It is a SPAC. So again, when these SPACs are announced, it takes a few days for people to catch on and to hear about it because these are very little known still. A lot of investors don't even fully understand them. Then we also have RMG Acquisition, which is merging with Romeo Power. Again, this is another company that we're up like 20% in. Some people in our Patreon group talked about it, and actually several of these SPACs. One of our members has talked about them, and he had like a portfolio of about 10 of them that he was going to invest anywhere between $10,000 and $100,000 in each. So it is an interesting thing to think about, but RMG is up pretty significantly right now. They produce the batteries for electric vehicles. It's kind of an interesting idea because we have seen EV explode. We've seen charging stocks explode. Now are battery stocks going to explode? It seems like it because they're being pushed up a lot. I have invested in them just a few days ago. So definitely consider buying the stock. I mean, of course, do your due diligence with all of these. They all could go down drastically. They're all at pretty high levels compared to where they've been in the past. But this is an interesting company to look at. Now, the next company is one that I've talked about a lot on the channel, which is Workhorse. So I have liked Workhorse for a while. I've ridden out the highs and the lows. We've started at maybe $15 a share buying in, and we bought in all the way up to $22 a share. We kept on buying. It went up to 30. And then I thought, okay, I could sell out for a nice profit. I think I had around an $18 cost basis, but I waited. I wanted to actually see the USPS decision. So USPS is giving out a massive contract, and the question is whether Workhorse gets it or not. A lot of people think that they will get a good portion of it. So then the announcement didn't take place. So then it fell back down, and then it went back up, and then went back down. And then we had already decided, they had said that they were looking at the end of the year, but some people thought earlier. That's why it fell down. And now it's back up, and a lot of people are, selling out. A lot of people are buying in still ahead of the USPS decision. But I think we'll get a good portion of the USPS contract. And it is supposed to be announced at the end of the year. So if my thinking is correct, I think a lot of people will start to buy in here in December, start to push up the stock. Some people will start selling then too because they'll sell ahead of the decision. And if it starts to get into the low to mid 30s, I'll probably start trimming my position to take some profits. But that is something that, I haven't completely decided what that number is. It will have to depend on whatever's happening at the time. I can't make a decision for something that's going to happen 2 or 3 weeks out. But that is what we're looking at now. I think it still could run up, but again, there's some extra risk in this company. So thank you guys so much. I appreciate you guys watching. Again, all these companies could go down. All of them could go up 100%. We don't know exactly, but we're just trying to make the best decisions possible. Again, we've picked out some really good stocks recently. We've picked out some companies that, actually 3 companies that have gone up 80+%, and that's just in the last week or two. So definitely consider joining the Patreon, seeing what everyone else is investing in, what everyone else is buying, seeing what I'm buying too. Do your own due diligence, but I think these companies are ones to look at, especially if they start falling down or if they start running up. There's a side to both of those. Again, there are those 4 free stocks from WeBull, and I will see you in the next video. Bye.